It's Monday, November 10th, and here's everything you may have missed in business and finance since Friday morning. U.S. stocks had a wild ride on Friday. They started the day deep in the red, but bounced back significantly by the close. The S&P 500 and Dow ended the day slightly up, and the Nasdaq ended the day down. Despite Friday's reversal for the S&P and Dow, all major indices ended in the red for the week. Travel and leisure stocks, so think airlines, hotels, casinos, and restaurants, had a strong day. Apparel, home builders, and media companies also did well. Big tech, however, stumbled, especially Tesla, which had the weakest performance among the Mag 7. Semiconductors, banks, and crypto were all under pressure. Investors were still nervous about the government shutdown drama, AI infrastructure spend, and signs that the job market may be cooling off. Even companies that beat earnings expectations struggled because given valuations right now, Wall Street's bar is set extremely high. Gold rose 0.4% Friday and oil was up 0.5%. Bitcoin had a strong weekend and is back above 105,000 even after dipping below 100,000 last week for the first time since June. The government is still shut down. There was a glimmer of hope Friday afternoon when Democrats offered a deal to end the government shutdown by extending healthcare subsidies. Republicans said no, but last night a small group of Democrats signaled support for legislation to fund the government, providing the votes that Senate Republicans need to move forward with a spending package that could end the government shutdown in the coming days. The measure still has to be debated and formally passed by the Senate. Then it would go to the House for passage before heading to President Donald Trump's desk for his signature. Mounting travel chaos, along with SNAP confusion, ACA open enrollment, and the lack of pay for many federal workers have increased pressure on Washington to reopen the government. The Fed is playing it cautious. On Friday, Vice Chair Jefferson said they'll take it slow with rate cuts, and New York's Fed president hinted they might expand the balance sheet again soon, increasing the money supply. The University of Michigan's Consumer Sentiment Report came in weaker than expected. People are worried about the shutdown, but individuals with large stock portfolios felt a bit more positive. Inflation expectations for next year ticked up slightly, while long-term expectations eased. Some earning highlights from Friday. Expedia jumped 17.6% after strong earnings and upbeat U.S. travel trends. Take-Two dropped over 8% after another delay was announced for Grand Theft Auto 6. Affirm rose over 11% after crushing expectations. Texas Roadhouse rose 2.7% after showing solid sales, though food inflation is squeezing margins. Sweetgreen, on the other hand, tumbled 7.5% after cutting guidance for next year. This week's key economic data, like inflation and retail sales, is delayed due to the shutdown, but keep an eye out for small business optimism and a wave of bond auctions. Q3 earnings season will also wrap up with a few companies reporting. The market is still riding on hopes for Fed easing, strong earnings, AI momentum, and an end to the government shutdown.